I think, almost all of the fintech, lending is the magic wand for profitability. And that typically comes, as the last, quiver. And we are, probably going to have a quick 30-minute conversation around, what lending is all about before we actually break out for cocktail and dinner, right? So hold on to your seat, and I have like a very good mix of panelists. We've got a mix of consumer, fintechs who have been, crushing it on the digital lending side. We also have infra, in some sense, and the, SME representation as well, right? And I read a report recently of one of the, venture funds which spoke about how, the whole narrative around digital lending is so true, where they compared it, over the last 15 years, where it went from somewhere around 50 billion ballpark or 7% of GDP to close to 500 odd billion in the last 15 odd years. And they're pegging that to grow to almost about 20% of GDP to grow to close to $1 trillion in the next 3 or 4 years, right? So there's massive tailwinds that is going to sort of kick in, and that growth is going to come probably at 2 or 3x, and Nandan, of all the people, alluded to this recently in one of the conversations where he spoke about, the whole impetus that account aggregators is going to give. And it's also going to lead to a lot of job creation, because if there are 20 million SMEs, 40 million jobs are likely to get created because of, incremental access to, finance, right? I'll probably kick off the conversation, first going to you, Deena, and everybody keeps referring to, data being the new oil, and, you've been at the middle of a lot of the data. And we heard, some of the panelists talk about how much of that data is really put to good use. What's been your experience at Open? Have you seen that getting deployed, or are you getting pushback from lenders or actual custodians of the data? If there's banks whose accounts get connected to the Open platform, what's been the experience? If you could share some light on that.
Thanks, Madhu. A very important, critical question in the current scenario. What we do as Open also is enabling the data to be in a very structured manner. So data is a new oil, but did we have dearth of data? But so far, I don't think that was the case. The problem was that it's like the letters of the alphabet. We had the data, we had it all strewn around, but unless you stitch it together, it doesn't make sense. So unless it becomes words, unless it becomes phrases, it doesn't make sense. And it's exactly the same problem with data. So when we got into the MSME sector also, it was the same issue. So when you're looking at the cash flow management, there can only be two things which can come out, which we spoke about in detail on the, if you have a surplus, how to manage the cash, making money work for you, or if you have a deficit, where does it come from? But this is where the challenge is. When you look at the deficit part of it, data is extremely important to determine two things, whether you have the intent and whether you have the ability. So ability part and both the parts are being solved by data, and that's where we came in terms of enabling or making sense of it. So with the users also, what we do is that traditionally we had this challenge of, even lenders had the challenge of not able to put all this data in one place in a readable format. And that's where one of the major challenges, even for the user when they are approaching for a lending or access to lending, was the fact that they couldn't show structured data. The most important problem was also that the money flow happens in the bank and it doesn't talk to any of the other systems. And this is where, beautifully we had this discussion around the digital public infrastructure and, how all of that is crafting and coming together. And then there should be enablers for the user themselves to commit this data for somebody to use in a meaningful way. And that's what we have been doing. And that's exactly, from a way in which it has been received, and with the recent experience with the lending as well, where we were able to drive value within the ecosystem, that is, our conviction has only increased at this point in time.
Fantastic. And this also goes back to how even lenders are able to put that data to more meaningful use, right, in terms of underwriting. There's always this fear of, I think, somebody sort of made a point earlier about that data being owned by someone, the regulated entity as such. Are you seeing more and more lenders coming and asking, how have you, underwritten, or new cuts they are looking at? Is that something that's you're already seeing play out?
So, see, what we have also taken is, completely cognizant of the regulation, completely cognizant of the fact that it has to be when it comes to money matters, we have to be customer-centric. We have been hearing it through the day. And we have to be like, in terms of the data and the privacy part of it, we need to be extremely sensitive. So these two aspects, in whichever ways we work, whether it is right from the cybersecurity angle to being today we are a PAPG also, so from a regulation and the scanners we should be coming under, the frameworks we should be working under, and in the aspects where we're working directly with the regulated entities, because we don't step on that, neither do something which we are not authorized to do, so to speak. So that's something which we have always kept as a principle. That being said, within that framework, putting together ecosystem and putting together, or for example, a consent mechanism, completely it is if only the customer wants to commit this data for somebody's use and for a regulated entity, that's the only time when it goes. So it's our responsibility to ensure when we're creating a platform that is in compliance with every regulation that is there, right from data protection to the consent mechanism to who consumes the data. So all of those are taken care, and what we do primarily is how does the customer interact with the regulated entities to make it more effective. So that's where we come in and make a difference.
Fantastic. Madhusudan, if I can sort of pose the next question to you in terms of it's going to be the India's decade, in terms of the consumption credit story itself. All of the data points are pointing to that. You have been in the middle of this whole new wave of customers coming into the bandwagon for, probably NTC as the industry calls it. But you've had your fair share of challenges in the last couple of years. Challenges is probably the right word. There has been regulatory crackdown on certain business models. There's this imminent funding winter that we are all in the middle of. There's a new digital lending guidelines that came out. But we have emerged stronger despite all of this, right? What's been your take, and how has the outlook on the business changed in the last 12, 18 months? It's been very intense,
So good evening to everyone, and probably the only one thing that he did not put across was, after all these problems, how did you even survive and why are you sitting here, right? So I guess he kind of put down that in way. But yeah, let me start this, right? So basically, what is the entire confusion or the chaos that has happened is, there was a largely an unregulated space with which we all started as fintech lending players, right? So then the growth itself was so massive. I think it was basically checked by the COVID scenarios where even RBI was kind of monitoring that, and when the scale was so large and they felt that with that kind of an explosive growth without any kind of a supervision or regulation that could come in, this could be a very, very systemic risk if any such event would bound to happen in future. I think that's where the regulations came in the picture, and then of course so we have talked a lot about there's frequent regulations, there is DLG and whatnot. But what I would assume is that if you look at the fundamentals of all this regulation, I think the regulator has tried to bring about a framework with which we have to operate. I don't think they are saying exactly that these are the exact boundaries within which you have to do the things or anything of that sort. But if you look at the fundamental frameworks, I think there is the customer protection, and there are certain guidelines in terms of how one could participate in lending. Basically, the regulated entities are kind of known to RBI to kind of participate in the lending, and that's what they're kind of appreciating it. And those are the framework what they're really doing it, rather than to come and say that, whether this is going to kind of totally jeopardize the innovation that could happen and whatnot. Now, you talked many things in that question. So I think when we all started, there was a view. I mean, there were two extreme views about the fintech lending or the fintech sector itself. That are these? I mean, the earlier questions what I used to face was, are you the challengers to bank? I mean, our fintechs are going to be bigger than banks, and bigger banks will nowhere be in the picture. This was the first questions what I used to kind of answer when all it was jazzy and whatnot. And then there was a kind of a storm that was created because of there was many things that happened in the market. The regulations came in and everything. Then the questions which were asked by the journalist friends here was that, is fintech a bubble that is going to burst? Right. So those are the extreme things what probably this industry has seen it. I think the answer today is that it's going to be a coexistence with the lending ecosystem, right? So it could be banks, it could be the corporate NBFCs or the NBFCs which are matured over the years in running in a traditional way or a non-digital or a not completely digital way. I think the coexistence is what will be the answer. Fintechs are nimble. They can kind of get this technology front. They can change faster. They can adapt to the customer behavior and whatnot. But definitely they don't have the kind of balance sheet what the entire banking system provides. And therefore that coexistence would be the answer for the fintechs to kind of move forward. And definitely the last point was on your the winter to all this funding and everything. I mean, I don't know, I should feel fortunate because I just closed my series deal last month, so I don't know how should I take that. So yeah, definitely there is a winter, but I think the fundamentally good business models would get identified by the investors, and I hope to see that the winter actually kind of goes down way faster and gives a boost to the entire industry.
Yeah, I mean, I come from Chennai where winter is a pleasant thing. So we always have this view that I always tell investors, when we talk to them saying, winter is a nice thing in India. You probably have to get a new verbiage. But just taking a segue from what Madhu just spoke about, Gaurav, you've been at the forefront. I mean, you probably have a front row seat to a lot of the action that's happening on the consumer lending side. And, you had this, market operating in a certain way, and obviously the regulator crackdown. A lot of the founders are trying to figure out, business teams are figuring out new business models to sort of evolve. Are you seeing early green shoots of how some of those businesses have evolved from a digital lending standpoint? While the core remains the same, there's a consumption credit need that is getting met, but the vehicles through which it was getting distributed, PPI, cards were a great product, from a consumer lens. But how are you seeing that business getting redistributed, or what are the new green shoots that you're seeing on the consumer lending side?
I think what we are seeing largely is today kind of sharing this with someone at the bank, that one of the biggest innovation to my mind coming out of RBI, especially in lending, I think is going to be co-lending, right? And I think co-lending currently is understated, like what UPI has done on the payment side. I think this is going to be the biggest innovation coming in on lending. So today, if you look at what has shifted, I think what we are seeing is today largely partnership or ecosystem lending, coexisting between an RE and I would say non-RE, and as well as an RE to RE, right? So what we have seen now is there is very high degree of clarity when a bank is working with a non-RE, right? I think there has been some shift in terms of how some of the players were operating in terms of card or PPI, but a lot of that has now moved to, I would say, personal finance or I would say consumer lending. Second, we are also seeing a shift between how public sector banks are actually using partnerships, right? Whether it is with NBFC or it is with housing finance, they are actually using this as their own mode of distribution, right? Where public sector banks genuinely kind of thrived was largely on deposit and cost of fund. What they did not have was largely distribution. And I think this is kind of adding an edge. And today we are privileged to work with most of the public sector banks. I think segments which are, I would say, largely liabilities business, which is prime personal loan, auto loan, mortgage loan, public sector banks are going to come back with a vengeance. I think that's a space which they have seeded. Where we are seeing even foreign banks now is largely on prime PL, right? So, a lot of foreign banks are now looking at using fintechs for prime PL origination. So I think this, to my mind, is going to be the next wave. I think there have been challenges, and like what UPI has been able to do in payments, I think lending is far more complex than payment. I'll just share one example that today, if you look at a mortgage loan, the same loan is being underwritten very differently by different banks, right? So today, a public sector bank needs 1,640 touch points to underwrite a mortgage loan end to end, right? Whereas a private sector bank on the other side might only need 840, 850 odd touch points, right? So that complexity on lending, I think, needs to be simplified. And then last point I would make is that banks are horizontal. The providers of capital today are horizontal, and the players who are playing on the other side, whether it is fintech or like Madhu or what we are seeing in terms of NBFC, they are largely vertical, right? So you definitely would see 3 years, 4 years down the line, you will definitely see both intraoperability as well as interoperability, right? So a bank which is on supply chain trying to move to consumer lending or to pool purchase, right, or to enterprise loan, how are you going to be interoperable, right? Because you're talking to very different systems on the other side, right? So I think to our mind, next 4 to 5 years, what RBI has done, I think this is going to definitely de-risk the ecosystem. It's not just about access, but also opening different frontiers of where this will go.
Yeah. Just one follow-up to that, you spoke about co-lending being a theme, and there's a lot of nudge from the government also to actually adopt that. Is that benefit of co-lending getting passed down to the customer, or still early? Is it, the margins that you save because of a balance sheet, leverage?
Right.
Is it actually getting passed down to the customer?
And we have been at the front end of this. So I'll just share with the audience as well. So when we are looking at our numbers a year back, we used to do 1,500-1,600 loans a day. Now we do close to 28,000-29,000 loans a day on co-lending. I would bring out two trends, right? A year back, co-lending was largely about liquidity, right? So a lot of players were trying to do co-lending where they did not have access to liquidity. Now co-lending is not about liquidity, right? Because the biggest of players have come into co-lending. What we are seeing is largely either it is about cost of fund, or you trying to get into an adjacent space which you are not servicing, right? So where, if I have to simplify, a lot of low ROA business for an NBFC, which is definitely a slightly more higher ROA business for a bank, is what will go there. That's what we are seeing in mortgages, etc. I think to more a technical point to your point, I think the benefit of co-lending will start getting passed on to the customer as the ecosystem matures more on co-lending model 1, right? Where disbursement is happening real time between two partners. And that's where you can go into dynamic pricing over a period of the next 4 or 5 years. The pricing will remain largely static in CLM2, which is largely priority sector, or it's more quasi direct assignment is what you see.
Sure, yeah. Amit, if I can come to you, I think SME is the red hot segment in terms of lending itself. There's a lot of promise. There's also a lot of push from the government, in terms of to promote, SME businesses. And account aggregator is seen as the, magic wand, if I can use that, to actually accelerate, the whole access to finance for SMEs. Are you seeing early adoption of account aggregator in a meaningful way, or it's still in a POC phase that we'll have to navigate, some more before we get there?
No, so there is surely adoption. The adoption is on both sides. One is on the lender side, one on the consumer side as well. But it's about just a year since this concept started, so it's surely evolving. If one were to look at it in the early stages, not all data was coming in the right format or the right manner that we wanted. Early stages, the line products from the banks were not integrated, and so the data was half-baked. Today, I think the data integrity is far higher, and therefore the ability of a lender to look at an account aggregate data is far higher. That's number one. Two, more and more data will come in through the account aggregators. So GST has already been brought into the regime. The capital markets regulators already signed in. Mutual funds and insurance companies will sooner or later come in. So what account aggregator is finally going to be one source of financial data for a business need. Right? So when I said the adoption, there were impediments. There were these concepts about some line products not coming in, some banks integrated, some banks not integrated. Today, if you look at it, an individual ping has about a 90% positive rate. But there's still a long way to go on the ping on how does this data come for entities like a partnership or a private limited. So that's still yet to be solved. So it's an always evolving system, and I think as the system evolves, the lenders will have to keep evolving their tech stacks and their credit models to adopt to this process. The second piece about adoption is also at the consumer level. And there's a lot of education that needs to go at the consumer level, because it's still about creating an account, getting OTPs, and the consumer is still worried that all these 5 accounts will be visible to somebody. That's not the culture that we are an MSME lenders, and that's not how an MSME is wired to show clearly, be transparent about all these 5 accounts. So that education and adoption will take time, but eventually I think this is the way how MSME lending will happen in the country.
Fantastic. Deena, what's your take? I mean, how are you seeing adopted, or have you implemented some of that? Any early success that you've had?
So definitely, in terms of the usage of the AI or the intent, I would say that while there is some way to go in terms of that getting mature and completely effective, but this is a very, very crucial, it's going to play a very crucial role in the entire enablement part of it. And we have seen adoption, but at the same time, it's a known fact also on the, probably on the usage when it comes to on success rate. There are various things, right? And including the participation, success rate, everything. So while that being said, one understands there is a maturity curve which is there. But it has, if you were to look at it, probably at 12 months earlier to now, it has evolved in a big way. And you are seeing a lot of, initial resistance in terms of even the participants. Both sides are getting mature right now. So I would say that we are definitely using it, and definitely it is going to pave the way for a much larger way in which credit can be seen in India. And this is going to be like, for example, all of these part of the, the pieces which are coming together. Because I'm a big believer in the long-term way the lending has to become contextual. And that, for that, again, it has to come together as a complete ecosystem, right from different places from where data can be pulled in, to how it can be, who and how reads it, even for underwriting. It can be alternate data, it can be banking data, it can be, now that the GST data is coming into the AI. So all of these put together will become the enabler, and then it will onward go and sit where transactions happen. So that's going to be a full circle, and that while we are building different pieces of it, and as an ecosystem, this is going to be, AI is going to be play a very big role.
Yeah, thank you. Madhusudan, the whole, I think you probably, is the digital lending guidelines that sort of came out, right? I think that probably is kind of provided a framework from a consumer lending standpoint, right? Has this impacted your business good way, bad way, or is still not fully played out? Have you seen a change in the way banks are looking to partner up, if there's a co-lending opportunity that you're pursuing? What has been, it's been 6 months now almost, what's been the outcome?
Yeah, sure. I guess, before the digital lending guidelines actually came in, I think the industry was kind of confused whether is this model right, is that model right, and whether this practice is right or not, right? So that was the idea, and everyone was trying to kind of give it to their own sense. Ki shayad, if I go in this way, probably this is right, and this is how I read the earlier regulations of NBFCs and everything. But what was different, right? So what was different was there was an internet and a digital angle on top of it, which gotten rise to some of the platform models or some of the non-RE, what we would technically call them, right? So I think because there was a non-RE or a technical player or a platform player came on top of this banks and NBFCs, there were many things that were assumed to be kind of deemed right, and that was not very uniform. Or it was largely they were in a unison, but not exactly uniform in the way that the assumptions were being made. I think that was the need, and also it's not, so we always went to RBI asking various questions also. I mean, that would have been the other prompt for the regulator to come with the guidelines, because we always went and asked these questions. And since there was no regulation, they could not answer it rightfully. I mean, always the RBI answers based on certain documents, guidelines, what they've already built, and without that, they would never answer anything there, right? So even though they feel it is right or whatsoever. So I think that prompted for the digital lending guidelines, which we all asked for. And if you look at the entire guidelines itself, I think I would say there are two parts to it. One part is totally addressed towards the hygiene factors of the lending, right? So I don't think it is a new thing. They have re-emphasized what the mandates have been made for banks and NBFCs, that the same thing has been re-emphasized a lot, that even though you are a digital lender, we also want to see you that you follow these kind of guidelines. Now there are the other part which probably touched certain sensitivities of the entire industry was on certain factors like, FLDG is the most talked about factor that, which was kind of touched upon, right? So, and that is the only point what I see has come out, which probably was a major accelerator in the industry growth, and now there is a certain unclarity, clarity, whatever it is. So that is being sought now, right? So I think apart from that, if you look at it, I don't think there was anything that was not to be kind of deemed fit by the NBFCs or any lending activity. I think this is the only clarity point probably the industry is kind of now trying to look at the regulator in terms of giving more clarity. So in all, I think it consolidated and really made the businesses much more stronger because see, we have seen this, right? So there was a MFI crisis, right? So and MFI went through this entire journey. Only after the regulations came in, I mean, 7 or 8 or 9 out of the small finance banks have grown from the MFI world, right? I think although in a shorter term view, it all comes with a lot of pain, but in a longer term view, it stabilizes the companies to kind of grow and become much larger players in the ecosystem. I think that's the way I kind of look at it, and probably I welcome them. But yeah, of course, some of the early entrants and the mid players do see certain pains, especially with respect to the FLDG factor. That needs further clarification. Yeah.
The synthetics securitization needs to be solved yet, right? Gaurav, if I can come to you, you touched on this whole co-lending and how banks are now participating, more and more public sector banks are participating, and Mr. Vaidyanathan also in his sort of comment spoke about thinking beyond, couple of products that banks have traditionally done, vehicle loan and home loan and things like that. Do you see this as like probably an opportunity for the industry to sort of evolve to a model where a lot of the fintechs will focus on innovative new products, while increasingly banks will have that balance sheet play and just be a passive co-lending sort of, and a balance sheet provider of sorts? Is that reality, that's kind of dawning on us, or banks are still not warmed up and they're still going to traditional products where, there is certainty around ROA and, a PL, I can worst case flog my branches to get another 100 crores, in the last 3 days of the month, right? That's been the thought process. How are you seeing it, from where you sit in terms of how more and more banks are looking at innovative products on the lending side?
I think we are seeing right across the spectrum, right? So I think today, if you look at a foreign bank, whether it is consumer lending or even supply chain, right? Because what foreign banks don't have is again branches, and you don't now need branches, right? Because you can partner with anybody, right, to get that kind of distribution going for you, right? So whether it is retail or even supply chain, so you see foreign banks on one side, you see private sector banks today. I would say barring HDFC Bank, others are already in. There is definitely a conundrum, right? To say, if I have my own distribution, do I need to partner? Right. And if I need to partner, then on what product do I really need to partner, right? And what the fintechs constantly think is that are banks only partnering with us in the short term, especially if you are in the consumer space, to take away the customer and start doing cross-sell on their own, right? So I think, but cross-sell in my own experience is the most discussed word in boardrooms. Is very difficult to kind of cross-sell on the ground, right? So that's one piece which you see. What we are also seeing is largely a very tighter collaboration as we move forward, right? So you will see a lot of innovation coming in on the ground where customer experience will become more meaningful. One trend, at least my personal view over the next, if we take a slightly more medium-term view, I think the other side will start becoming much more horizontal. Fantastic. So I anticipate, somebody like Madhu who has started in consumer, becoming more horizontal on product, whether it is a two-wheeler finance or it is, insurance or any other form of financial product distribution. I think banks will be able to support, because now you don't need that cost of fund, because a lot of what was getting manufactured was largely to do with own balance sheet, right? And that's how it was getting priced. One last data point, I'll leave it with you on housing finance, for example, today. Why co-lending or partnership is becoming big is because every year close to 14 to 15% of your customers actually beat it out, right? So they actually moved out because that's one product which is very sensitive to liability, right? And now, housing finance companies can actually retain those customers. So I think it's going to be to my mind, innovation plus retention game and becoming more horizontal as we move forward.
Sure. Just the last question to, Amit, in terms of, traditionally you've had, SME business loans characterized by segment, right? So I could be, let's say, a trader in a specific segment. So there is a certain set of lenders who kind of service, that industry as a whole or that ecosystem as a whole. Are you seeing new, cohorts of companies or businesses or business models getting underwritten? I'm not even alluding to what, the earlier conversation around AA and all that, but are we truly seeing the emergence of new segments being underwritten because of GST data and whatnot, which otherwise was not present maybe even 2 years ago?
So one has to look at it in terms of what are these segments and what is servicing the segments? Are there specific ecosystems that service these segments, whether it's in supply chain, whether it is on their own digitization of product? And is there data available to therefore extend credit? So there have been multiple different ecosystems that work either in pharmaceuticals, either in manufacturing. There are a lot of examples of aggregators, demand aggregators, who have been working typically in one commodity aggregation, who've then integrated backwards to provide credit to that kind of customers. So absolutely, sectoral focus of either a ecosystem or an entity, therefore allows it to entrench itself better there. And therefore, the pie kind of keeps increasing because there is very sector-specific, ecosystem-specific data available. And that's happening across. So a lot of banks and BFCs have been therefore partnering with either these fintech ecosystems, let it be payments ecosystem, e-commerce ecosystem, supply chain platforms. That's where people are partnering to be focused on certain ecosystems. If you want to get into a complete apparel industry, then you will therefore partner with the e-com apparel giants and therefore go into their ecosystem. So absolutely, data apart from just banking and GST, this alternate data is very crucial and is the fourth layer. So the three data that are democratized today, the bureau, the banking, and the GST. And this fourth layer of data, which comes from a particular ecosystem, just helps lenders focus on the ecosystem. So the lenders will keep entrenching themselves in multiple ecosystems and therefore ensuring that the credit really goes to the last mile with an informed decision.
Fantastic. I think you're completely run out of
Just
time.
before
Yeah,
that, so definitely I'm not a spokesperson on the regulation or regulatory side, although everyone else got to speak about business models and whatnot, and I don't know, Madhu was very, very considerate enough to kind of ask me about the guidelines and whatnot.
After the last session, I feel RBI has been kind to us. So, SEBI seems to be, as a regulator, a lot more. Everyday tests is not something that we do, although we get circulars almost every other day. Thank you, everyone. Thank you.
All right, thank you for that wonderful session.